ഒന്ന് എന്റെ ഫോൺ വേറെ എന്തെങ്കിലും കണക്റ്റഡ് അല്ലല്ലോ ഒന്ന് നോക്കണേ. ടി നോക്കേ. Hi, can you hear me?
Hello.
Can you hear me?
Yeah, good evening, Vikram sir.
Hi, just
Yes,
one
sir,
moment.
yeah. So, just give me a second. I'll start the meeting.
Just hold on 1 second. Just give me 1 second.
Sure, sure. So we can wait for a couple of minutes. Participants are joining.
Is this better?
Yeah, it's really great.
Cool.
Yeah.
Perfect.
किसका लैपटॉप है? Hello everyone. So a very pleasant evening. Welcome to Genesis, presented by Hirect in association with D2C. So it's a great pleasure for me to introduce our speaker, Mr. Vikram Duggal. So before just starting this session and introducing about Mr. Vikram Duggal, just let me play the video of our sponsor.
Post a new job and receive responses within 5 minutes. For a verified recruiter, posting a job can be done with a click of a button. Recruiters don't have to wait for candidates to apply. Candidate profiles are recommended based on the job post, and recruiters can start communicating with the recommended candidates immediately after posting the job. Privacy of the users is also protected. Personal information like phone number, CVs are shared only with consent. The communication can either be initiated by the recruiter or the candidate. In my case, you can see within 5 minutes of posting the job, the recruiter could chat directly, receive responses quickly, and even schedule interviews with the candidates. Within a few minutes, the recruiter can start expecting more candidates to view the job post and reach out to them by initiating a chat conversation. Since Hirect is mobile first, responses pour in any time of the day as most people are within the vicinity of their phone. A few hours later, as you can see here, a product manager job post was added by me last night, and by morning I have already received 15 plus chat requests from job seekers. You can see that my feed is full of product managers from top institutes and companies as matched by the algorithm. I'm able to initiate a chat with them and receive a response quickly, as I can see their last active time as well. Recruiters can receive responses from job seekers irrespective of the time of day or even at night, as Hirect is mobile first, and this makes it very accessible to the users. Direct chat, mobile accessibility, instant response, matching algorithm, secured privacy makes it 5 times better product for recruiters.
Thank you everyone for watching the video. So let me introduce to all of you about Mr. Vikram Duggal. So our session is being hosted by us. And so Mr. Vikram Duggal coming towards, he's going to talk about the scaling up startups and investor journey. So an investor, mentor and partner, Mr. Vikram Duggal is a managing partner at Ekcle Ventures and Ekcle Advisory Services, an Indian focused network and platform that invest in early growth startups such as yours. And Mr. Vikram is a jury member of the National Startup Awards and is associated with IIM Calcutta Innovation Park, CII, and other reputed organizations as well. So his ventures help promising startups and MSMEs scale with strategic inventions and market linkages, etc. Working closely with VCs, PEs, and industry bodies. Now, thank you, Mr. Vikram Duggal, for agreeing to guide all these young entrepreneurs. And I'm really, I'm sure everyone will be benefited from your session. So the stage is all yours.
Thank you so much. Really appreciate those kind words. And thank you for having me over. It's always a great opportunity to interact and share ideas with young minds. But instead of being a monologue, I would like this to be an interactive session, with your permission, if that's okay. Because it's always better if there is a back and forth of questions and queries coming at me, because that will make the the interaction more relevant, the session more relevant. Because if I were to just continue on my with my own thoughts, I mean that just might not be something that the audience members are looking to find answers to. So before starting off, could I have some thoughts from, since this is any which way is not a huge group, it's a pretty small group. It's not like 200-300 people. It's pretty manageable, right? So I would like to have some thoughts from everybody on what they would like to have this session cover. what are the expectations in terms of what would they like to know about more, or like to clarify some doubts about. So any thoughts, guys? Any volunteers? I think we've got 21 participants.
Hello. Hello.
Hi. Hi.
Hello, sir. Cyril. Nice meeting you, sir. I'm mid of a traffic, so I can't switch on my video. So I will.
So that's okay. That's okay. But if you can just either paste your queries in the chat box, or please
Sure.
feel free to speak up over here. What you're looking to expect from this? What you're looking to find out? Somebody mentioned raising funds for idea stage. Am I right?
Yes, someone like Nancy Bansal is there. She mentioned that raising funds when in idea phase.
Okay. Okay.
Yes.
What else?
So my quick question will be: right now, my startup is around 2 years old, and we have our product certification also ready. We are entering into the production phase right now. So from here, how could we scale up our? So what kind of a business model we have to have? Ours is basically a healthcare startup, and we are working on a equipment.
What startup?
Healthcare.
Healthcare. Okay.
Healthcare. Yeah. So right now, diluting the equity, or kind of what kind of funds we have to look for, sir, and the kind of investment. We have our product ready with certification, due certifications, everything. So we are looking for funds right now for scaling up into the production level. So what kind of equity options will be available for us? We do have some idea. So from your words, it will be better for us.
Got it. Anyone else?
Thank you.
Yes, please go ahead.
So someone has also mentioned as well, Ishika Goel, understanding which idea can be selected for beginning out of many ideas.
Okay. What else? That's it? No more queries? Nobody else wants to know anything else?
So one more
audience, okay.
One more message in the chat box. How to know our target audience? Yeah.
Okay. Okay, so let me start off with these 2-3 things at least. Is there a trade-off between frugality and scalability? As you see, sometimes. Sorry, just let me read this. Is there a trade-off between frugality and scalability? As you sometimes see founders are frugal with the approach. How to find co-founders? Very interesting. So let me take this one at a time. Let me start with how to find co-founders. One of the things, because that's a very, very relevant point, because whenever investors are looking at a particular startup, the first thing they look at is a team. Just so you know, they do not look so much at the idea itself, because ideas at the early stage I'm talking about. Of course, they're looking at what is it that you're trying to do, and how different it is and everything else. But what I mean to say is that it's not that they look only at the idea. I would request if people can mute themselves and.
Yes, sir. I muted. You can go ahead.
Yeah. So like I was saying, so team is a very important aspect, because it's about complementing skill sets. That investors look at that. For example, you've got one person handling the product, and you can't expect that person who's a techie to also know everything about law and finance, right? For example. So similarly, somebody who's an accountant, you cannot expect that person to sit down and write code. So you need to have different skill sets, complementing skill sets in your team, in your co-founders. So while one person is, the way I would look at it, is handling the product side, the other person should be in the market facing side, meeting customers, clients, doing sales and marketing, is representing the brand out there in public. Another person is probably managing the finance and legal and operations. So these are very, very different, attitudes also that are required in the people. You can't have an introvert person be the marketing and sales guy, right? You're never going to get anywhere. Similarly, you can't have a, somebody who's, for example, a very shy person, be up there representing the public, represent the company and public. So similarly, so when you are looking at these kind of complementing skill sets, obviously you're not going to find it in your, engineering institute, for example. You probably might have to look at other places. One good place to start is co-working spaces, incubation centers, accelerators. And when you go and attend startup events, you should be networking, meet people, other similar people, see what kind of, because a lot of, not everybody who comes and attends events is the owner of or a founder or has already got his team fully set. A lot of people are just exploring things, right? So I think those are the places where one could go and find co-founders. Also, there are a lot of platforms online, I think, if I'm not mistaken, where one can go and basically try to look for co-founders. If nothing else works, why don't you put up a posting on any one of these sites, for example, like Flexing It or any one of these gig sites, or even a job site for that matter, saying you're looking for co-founders, right? And what are the kind of skill sets you're looking at a co-founder. So team, like I said, is one of the most important aspects that we look at when we are deciding which startup to invest in. The other second most important aspect we look at is how big is the idea, how scalable it can be. Because there are a lot of ventures, let me put it this way, which can be good businesses, where the company can be a decent size of a company, maybe 100, 200 crores size kind of a company. But essentially, when equity investors are looking at investing in startups, so whether it's angel investors or venture capital funds or private equity funds or family offices, all these are equity investors, which basically means that they are going to be buying shares of your company in exchange for putting in money into the company. And it's using that money that you can help the company grow and scale up really fast, whether you use it for hiring and paying salaries, or expanding operations, or setting up manufacturing facilities. It could be used for various things, right? So when equity investors are looking at coming in and participating in a specific round, what they are essentially looking at is the price at which they came in and the price at which they're going to be exiting. There has to be a huge 20x, 30x, 50x, 100x kind of a growth, or upside in their investment. So suppose somebody is coming in and putting in, say, for example, 1 CR or 2 CR, they are looking at definitely making at least 20, 30x, so 20, 30 times of that money by the time in 4 years, 5 years, kind of a span of period, right? So that can only happen when the company itself has grown that much or scaled up that much. And that can only happen in those kind of businesses, which or those kind of ventures, which have that kind of an opportunity for companies to reach that kind of a scale really fast. So, ideas, when you're selecting ideas, when you're looking for which kind of things will work, that's one of the things to keep it in mind, that is the business opportunity, is the market, first of all, that huge? If you're looking at something very niche, a niche product or a niche service, then it's going to appeal to a very select and very small group of people. If you're looking at something which is appeals to a larger group of people, then you have to see that how big is that group of people, who's your customer base, potential customers, and which this is something which we called TAM, total addressable market, right? So how big a company can grow and how fast it can scale up, that is a very important determining factor in before trying to figure out whether we want to invest in this company or not. And I think those are the aspects one should look at when you're trying to scale up. So coming back to the topic of scaling up, I mean, so there's always like somebody asked, is there a trade-off between frugality and scalability? Well, yes and no. The whole idea is, of course, when you're starting off on your own, you're bootstrapped, you don't have too many funds of your own. So there are various ways where you can get some initial money, which is, we call that friends and family round, where you borrow money from your friends and family and ask them and tell them you'll repay them back, or get them to invest in the company itself. The other is, participating in various competitions, startup competitions, and winning. And these days there are prizes of 10 lakhs, even 5 lakhs, 10 lakhs kind of prizes. There are obviously government and private grants that are available for various kind of startups. Like for example, there's BIRAC, which offers grants for healthcare related startups or people who are working on medical devices. For example, there's TDB, I think, which is Technology Development Board, which offers grants for technology-based tech startups, which are trying to do something, in either, say, for example, which basically involves some kind of technology. Need not be totally, AI, ML kind of stuff. But when I mean technology, it could be also something as simple as trying to make a different kind of a water filter, right? So, there are various kind of grants also available. So there is a lot of options for people to get out there and get the initial fund started. You can list your idea on a crowdfunding platform for that matter, right? And get people to participate. But I think a very good option is to go and, apply to incubators and accelerate. A lot of these incubators have actually got funds, whether it is from, the government or whether it's from private foundations. So these incubators that that they invest in the startups. Just hold on for a second, please. Just 1 second. Yeah, thank you. So I could not unmute myself because I think it was a permission that was required from the host. Anyways, so coming back to the topic, which is how do you scale things. So once you've gotten into an incubator and accelerator, I think these guys, a lot of these entities have got mentors who are associated with them. And whether it is in terms of finance or marketing or sales, these people help out the various founders in the different aspects of running a business. So it's definitely a good idea to be involved or associated with some kind of an incubator or accelerator, because you get a lot of support from these kind of networks, whether it is opening doors in terms of client connects, customer connects, whether it's in terms of getting to know about different kind of policy changes that are happening, because these are domain experts. Whether it is, for example, if you're into frozen foods, you would like to know from a specialist in the industry what kind of freezer you would like to purchase for your manufacturing or for your storage facility, right? So there are various aspects of running a business on which you would need help and advice. And my suggestion would be to reach out to such kind of platforms and networks, incubators, accelerators, and get that advice when it is required, because making the wrong decision could really set your entire plans back, and or not being able to make a decision when the right opportunity comes along. That also itself is quite something that can set back your plans considerably. So having said that, in terms of scaling up, just a moment. Okay, I'm just scrolling through the questions. So come back to that question of, is there a trade-off between frugality and scalability? Yeah, so sometimes the founders are frugal with their approach, but doesn't work with team size goes. Yes, one need not be frugal per se. To the extent that it's damaging the business. Frugality is always something that's appreciated and something that should be, one should strive for that. But one should not make any unnecessary expenses or any unnecessary, investments or in various things which are not required. For example, if you should scale up your operations only, as much as your funding is allowing you to. So if you've raised funds, or if you have managed to get funds, for example, which will give you a runway for a year, I think you have to start off your fundraising activity immediately, because any fundraising activity takes about 6 to 8 months at the very bare basic minimum. Sometimes it can take a little longer, right? And you don't want to be in a situation where you do not have money to pay your employees or pay your rent or pay your electricity bills, right? So frugality is just basically trying to work out, or scalability, that trade-off is just basically trying to work out how much money do you have, and how can you make that money last for the next year at least, right? And then figure out what kind of expenses you can take, how many people you can hire as a result, right? So I think that's the trade-off really. So whenever you're raising any money, you should be then raising money as per a plan, saying that, look, here I am, I've got, say for example, 1 CR, and I'm hiring a team of 3 people. Each person has a salary of, say for example, 15 lakhs per annum. So that's 45 lakhs already gone. The rest I'm going to be spending on, say for example, rent, electricity, phone bills, whatnot, right? And this is going to last me for an entire year, right? Now, but if I want to grow, this is my desire to take the company to, for example, double or triple the growth, which I can easily do. But for that, I need 5 CR. So then you get out into the market looking for a 5 CR funding, but that has to be has to have some connect with your revenues. That has to have some relation to your revenues, because usually the valuation of the company is what is a determining factor in figuring out how much of a company you want to give away, right? So for example, if your revenues, if by spending 1 CR, you manage to get revenues of say 2 or 3 CR, then possibly you can look at a 5x to 10x of that number as a decent valuation, right? And when you're out there looking to raise, so say for example, you've done 3 CR, you've got a valuation of 10x, which is 30 CR. And when you're out there looking for the next round, if you're looking to raise, for example, say 6 CR, you will end up diluting 20% of your company, right? So that's how it typically works. In the seed stage, in the early stages, till in the Series A, typically anywhere between 15% to 20% dilution is what is the market norm, what is the usual industry norm. So this is how one should kind of try to raise money. And in terms of scaling up, obviously depending on how much money you've raised and what has been your marketing plan, what's your advertising plan, what's your plan of whether it's online advertising or offline advertising, whether it's you're going to hire bloggers to write for you, use that money to host conferences or attend seminars. So that totally depends on the product or service that you're trying to market, and what kind of ways and methods and means you will take to be able to reach out to your potential customers. In terms of scaling up, it's just a factor of basically trying to see how you can acquire your users or customers or clients at the fastest rate possible without burning too much, because there are some industry standards, right, also on certain things. So for example, there's something called a customer acquisition cost. So if the industry standard of a customer acquisition cost, for example, is that it should be, say, 1/10 of the business that the customer is bringing into the company. So for example, if you sell a product to a customer and the customer is paying you 100 rupees for it, then you should not be ideally spending more than 10 rupees in acquiring that customer, right? So that's a customer acquisition cost. I'm just saying, hypothetically speaking. So if that is the industry standard, and but you're not following that, and you are ending up spending 50 rupees to get a customer who comes in and spends only 100 rupees on you, on the company, right? On buying your product. So your unit economics are then going to be totally, off the charts, because the profitability is not going to be there. And if you factor in the other costs, you may realize that you're actually making losses. So investors understand if you're making losses at the company level, because that's for the growth that's going to happen down the line. So I've hired people today and I need to pay them the salary today, right? So I need to, but only after 6 months is that team going to be able to bring in the customers and the clients, which will bring in the revenues. But I can't not be paying them for 6 months, right? So that's something that people understand. But if your unit economics are so messed up that you're losing money on a per unit cost or per product, and you're not, you don't have the right metrics or right percentages of margins of, that you've kept for yourself, then I think that's a business which is doomed for failure, right? So that's something that one needs to be really careful about. Let me just quickly go through the couple of more questions. How to know your target audience? Well, that is something that is, I think, the most important thing to know. I mean, if you've already got an idea and you've got a product and service and you do not know who your target customer is, then I think you're in the wrong business, or you shouldn't even be, starting up. Because, sorry, is somebody trying to say something? Okay, so for example, if you've got, I mean, I've seen a lot of examples of products which or innovations, so-called innovations, which people come up with, and then they sit and scratch their heads. Now, this is a great thing, but who do we sell this to? So that's a problem one should not have, because this is just putting the cart before the horse, not the horse before the cart. You first try to figure out what is the problem that needs solving, what's the pain point of a large number of people. And the moment you figure that out and you build a solution for that specific problem, you've got a great product or service on your hands, right? I would request people to mute themselves, please, so we can avoid the background noises and sounds. Thank you. So identify problems that need to be solved. For example, and India is a country which is filled with problems, right? I mean, we all say that there's so many problems, so which is great, right? So if you go to the rural areas and you find that, say, for example, the women of a certain village have to walk for say 5 kilometers every day to get water, right? So as a government person, the solution would be simple, right? To just put a, have a tube well right there in their village. It's as simple, right? For a startup, is there something you can do? Can you come up with, say, for example, a solar based unit which condenses the moisture from the atmosphere and turns that into clean drinking water? And that is something which can be easily, say, for example, paid off in EMIs by these people, right? Which doesn't pinch them too much. So these are the kind of first approaches that one needs to take. For example, identify the problem to be solved, right, and then try to find what is the solution. But if you're coming up with something really fancy, then you'll obviously be trying to figure out, now who do I go and sell this to? So yeah, we've got some more questions coming in. Good, this is good. Is it necessary to be unique? Yes, absolutely. Otherwise, how is it going to scale up so fast? You're going to get eaten up alive before you can even start walking off the ground. And see, if you look at any of these, so India's seen already, I think, over 40 unicorns in this 1 year, 2021, which is absolutely fantastic, right? I mean, until 2020, we had about, if I'm not mistaken, a total of 20, 30 unicorns. And just in this 1 year, we've seen 40 unicorns already, right? Companies that have reached $1 billion valuation. And if you look at the timelines that they have taken to reach $1 billion valuation, those timelines have been coming down over the years. So earlier it may have been 15 years, which came down to 10 years. Now companies are becoming $1 billion companies in 5-6 years, right? So that is the kind of scale that people are expecting these rockstar startups to have. And if that is not the kind of unique idea that you've got, how are you going to be able to manage that kind of a scale, right? It's only when something is really unique, very different, you have a something which is very innovative, that there is a clear-cut competitive advantage that you have, and you're the only solution out there in the market, and which is why everybody's going to come to you. So it's very, it's quite simple, really. That is the premise on which people invest in the company as well, saying that, look, this guy is bound to, or this team is bound to just grow by leaps and bounds because they've got nobody on the radar. But that rarely ever happens, that there is no competition out there. There will always be competition. There will always be similar ideas, if not exactly same. But at least it should not be a market. It's like, for example, if you have to get into the Chinese food market, there are hundreds and thousands of Chinese food restaurants, right? What are you going to do which is so different from what anybody's done till now? The moment you crack that, yes, you can definitely be part of that market as well and have a huge space in that market, right? And create a totally different, your own niche in that, in the entire industry, right? Because that is something which only you are doing, nobody else is doing. There are roles available, for example, right? But Fasos was the first brand, first company which made a chain of outlets that was only focused on rolls. In most parts of the country, you'll get momos, right? For example, but Wow Momos is the only guy who came up with a full chain of momo outlets only, right? So that's what one needs to look at. That if you're trying to do something with even in such a common thing as momos, for example, or rolls, even there is a scope of innovation or doing things differently. So it's all about how uniquely you do it. One doesn't have to have a totally earth-shattering idea, but how you execute it, how you roll it out, how you package it, how you position it, how it, what is the value proposition that you're offering to your customers? I think that's really important. And again, coming back to it, what is the pain point that you're solving, that you're addressing? That is the most critical aspect of running a successful startup. Are there more questions? investors, yes. So if there is a unicorn present in the market working in the same space, it would be challenging to convince the investors what can be done in such a situation. So yes, you're right to a certain extent, because initially people did think that having such a big player in the market is going to, and they are going to be, I mean, there's no point getting into such kind of a situation where they're just going to come and acquire you. But then of late there have been a lot of investors also who have come in, because there's a lot of liquidity in the market now. There are a lot of, so the whole ecosystem is expanding. One has to understand that, right? Earlier the investors were very few and far between. I think not more than, say, 500, 600 or 700 investors in the entire country. But today there are more than 4,000 and counting angel investors itself. They were probably about 10, 12,000 startups to begin with. I mean, begin with in the sense I'm talking about 7, 8 years back, because the things have really shot up like crazy since that time. And that was the time since I got into this whole ecosystem. And I think today there must be over 50, 60,000 startups or more. So if, and they're all realizing that India is a huge market as well, right? I mean, people's incomes are rising, people's affordability, their desire, their ambition, their aspirations are rising. They are able to, can buy and consume a lot much more things. They are wanting solutions to a lot of their problems, and therefore their need for products and services. So, and outside India also there's a huge market. So, but India itself is so huge that it's not possible for just 1 or 2 players to be able to capture the entire market. I mean, despite the fact that Flipkart and Amazon have become so huge today in India, online retail is still a very small percentage of the entire retail. The majority of Indians still prefer to do their shopping offline, right? So India is such a huge market. There is tremendous opportunity for probably another 6 more unicorns to come out in the space of online e-commerce. And that's what people are realizing, that, now that, if, of course, it'll be probably a little tougher because these other guys have got so much money that they'll give you competition, but then it was never going to be easy, right? And if you have to make a name for yourself, I mean, look at Nykaa. Nykaa has just, come up with their own IPO. Nykaa, I think, came up a lot more later than Flipkart and Amazon, but they decided they're going to focus on, beauty and cosmetics and that kind of stuff, right? So similarly, you need to find your own niche. You need to find what it is that you're doing so differently. How are you going to be able to, find something which is going to make sense to a whole bunch of people? For example, there's this website, e-commerce platform called Purple. They specialize in selling perfumes and fragrances and deos, right? So, and this is some company that has been, I think, Ivy Cap Ventures has invested in them, and not too long back. So they're still in their, they probably might be raising their series just B or C, right? So they're not that old. So the whole idea is that how do you find something which is totally unique, and find the relevant investors and backers, because there are a lot of more guys out there in the market today. There are a lot many more VC funds out there in the market today. A lot many more angel investors, and similarly, a lot many more startups as well. So it's a great thriving ecosystem, and I think that mentality has changed of the fact that if companies are already too big, companies already existing in that sector, then newer companies will not find existing investors to put money in them. But yes, what can happen is that if you've got all the big investors, for example, the Sequoia, Matrix, Nexus, Kalari, whatnot, Tiger Global, if each one of these companies have made their bets in different companies, right, and each one is pitted against the other trying to make their own company succeed, that obviously it will be difficult for you to find an investor who backs you. But it's not to say that you will not find anybody. And down the line, I don't see any harm in a merger or acquisition kind of a exit event as well, because that just means that you are possibly now going to be also holding shares in the other bigger parent company, right? So I think it's a win-win for everybody at the end of the day. Let's see if there are more questions. If your startup requires collaboration with the government, that's always tricky. As investors, we prefer to, ideally stay as far away as possible from companies that have a B2G, that's business to B2B is business to business, B2C is business to consumer, and B2G is business to government kind of a business model, where your only customer is the government, because payments are mostly delayed due to bureaucratic red tape and whatnot. The situation today is drastically different, of course, from the 1990s or 1980s maybe. A lot of things have changed, but still it's not as simple and easy. And I have personally interacted with a whole bunch of founders who have been dealing with various government bodies and government agencies and ministries and whatnot, and it's not an easy task. It's pretty difficult to be able to get orders and tenders, a lot of compliances and things that you have to meet, regulatory issues and whatnot, and then keep on following up for payments. So it just takes so much effort to be able to get out there and do that kind of business that the entire scalability graph just drops down, and which is something which is very unexciting for any investor. Everybody loves to see the hockey stick curve, as we put it, right? Because as sooner the company scales up and grows up in its valuation, the more the investor is going to gain out of it, right? So I think that's really the key aspects one needs to look at. In case there are any more questions, I'd be happy to answer, or maybe the host can ask a few questions, maybe, I don't know. I hope this has been helpful.
I believe it's really going to help to a lot of young entrepreneurs in the world. In the initial few questions, I believe, are left, like how to know your target audience and something like that.
I think I covered that.
Okay. Then I think, sir, everything is covered. Oh, a new question came up. How's the carbon funding and carbon credits in natural and organic farming? So regarding the carbon
I have
credits.
Absolutely no idea about this, because one cannot know everything about anything. So this is not my domain of knowledge or expertise. I'll just have to take a pass on that one.
Okay. So anyone else, any more doubt, please, ask on the chat right now.
Yeah, if you have any more queries or questions, please feel free to ask, because I prefer a freewheeling chat rather than.
So one more question came up. What is the ideal break-even period investors would be comfortable investing in?
See, very frankly, break-even period, there's no ideal break-even period per se. It's just that how every business is very different. If you see Jeff Bezos' story, Amazon was making losses for 10 straight years in the US before it started turning profitable. And when it started made profits, it shot up like how, and there was no turning back. So today it's such a huge global, behemoth, right? I mean, but that's the thing. So depends on what's your journey, what's your targets that you have planned for yourself. If you're looking at, getting to be a leading player in the market, and for that you have to be, it requires you to grow at such a fast pace that you will be burning cash, burning money, by scaling up your operations, by hiring more and more people, by opening up newer offices. So you will be running losses for 3 or 4 or 5 years. So that's something that I think most investors are okay with. As long as they see that, yes, this thing, if we keep on scaling up at such a fast rate, keeping on hiring more people, keeping on opening newer offices, right, and putting in so much money, then eventually we'll be in such a position where we will be making truckloads of profits, right? So then that's fine. So it's all about the nature of the business. But if you are, like I said, if you are burning money at the unit economic level, that is something which is definitely not something people are going to be okay with, right? How to make a yearly. Once again, more questions have come in. When the value at risk, I'm not sure I understand the question. Do we have to always keep in mind the value at risk in a startup, or there should be none? The person who asked this, could you please elaborate? I'm not sure I get this.
Sujal Sharma, can you please repeat the question?
Not repeat the question. Can person elaborate? I mean, what they exactly mean by value at risk? Okay. Meanwhile, I'll go on to the next question. How to make a yearly or monthly business plan for startup, and what are the key performance index to add in yearly targets? Well, I think how to make a plan is pretty simple, right? I mean, if you look at, say, for example, any product, I mean, whether it's as simple as a bar of soap, right? And you are located in, say, Delhi, for example, right? And you want to go out and sell this. So obviously, the first thing you'd want to do is sell it within your own city, right? Then you'd want to go to a Gurgaon and Noida and then Faridabad and cover the entire NCR. Then you'd want to, I mean, that's if you're going the offline mode. If you're going in the online mode, you can be selling it all across the world, right? Now, you just need to be able to figure out how much of it you want to take on at what point of time. It's a function of how much money you have, right? When you make your targets considering a certain budget, a certain plan, right? So if I want that my product should be available in 20 cities from tomorrow, I need to be able to have that kind of manpower in those 20 cities. Do you even have that kind of budgets or those kind of money in the bank? So if you do, then great. Set yourself a target to be in 20 cities in a year. But if you don't have that, then you just have to be realistic about it and figure out how you're going to take it step by step. So I think it's just something that one needs to, I mean, there are tons of resources available online which will help you in trying to come up with kind of a plan like that. But in terms of performance metrics, I think the most important thing is the revenue numbers. That's what everybody looks at. Top line revenues and second, profitability. As long as that is happening, your employees are not leaving you, your attrition levels are low, you're like I said, you're not losing money at the, burning money at the unit economic level. I think those are most important things which people look at early stage. Nobody's expecting companies to solve every problem and be completely glitch free right from day one. There are teething issues in companies and which are, solved as the company grows older and evolves. Of course, all your accounting and everything else is not going to be perfect, and all your books is not going to be in, place from the day one. All your processes and systems are going to be built as you grow, as the team expands, as more and more people join you. Similarly, more and more newer processes and systems will start coming into place, and your entire organization will be a more professional or more organized, and not so. But you can't start that off from day one, right? So it's just a function of evolving. Okay, by value at risk, I mean that thinking about the future competitors and all factors like market crashes. Wow, there's no way one can ever predict or be able to factor in market crashes into any business plan. I mean, if one were able to do that, I mean, if somebody is able to do that, please come and meet me. All the investors in the world would like to, understand how you've been able to predict market crashes. Sorry, there's a clarification. Okay. The extent of possible financial losses a firm occurs. So that's, I think, an accounting thing. So you probably accountant can, help you, or your lawyer can help, ensure the business against certain losses, and that would be a question more fit for them. I'm neither an accountant nor a lawyer, So I'm afraid I won't be able to help you in terms of figuring out what is the financial impact of any such kind of events, and how whether you should be insured, or how should you factor that into your what is that called, um, um, business contingency or plan or something like that one makes, right? So I guess that is just something you'll have to take the help of a lawyer and a accounts guy. I would not be the best person to be able to answer such a technical question. I'm sorry. Moving on to the next one. What is a suitable or right business to invest this time? Wow. There's no formula per se. If there was, then everybody would be investing in just the same business, right? So it's just about finding the businesses, like I said, who've got a great, potential, great market opportunity. They're on the right path of growth. Today, clean tech, electric vehicles, all these things are, I think, in fashionable today. They are in trending today, but 5 years back, nobody was talking about them. Maybe 5 years down the line, this will all be a, old and, forgotten story. Who knows? So I personally do not, invest in companies based on trends and what's the best thing to do right now, because it differs on a case-to-case basis, right? It totally, I mean, what you're seeing in the news today as big companies, they started off, 5, 6, 7 years back, possibly. That's why they're in the news today, right? So today you might be thinking, oh, this is trending, but if that was the case, they weren't trending 5, 6, 7 years back, but then people were still investors were there who invested in them, right? Who took the early stage bets, who took the first bets. So for early stage, it's very difficult to find out what's trending, because what's trending today, these companies are already so huge that early stage investors, people like us, angel investors, will never be able to invest in such kind of companies. I mean, unless it comes up with an IPO, then everybody can, buy shares. But if you ask any, in fintech companies, for example, or edtech companies are really happening right now. Yeah, sure they are, but can I or any of the angel investors today invest in a Byju's or a White Hat Junior? Afraid not. That moment is long past. So I guess there are no further questions in the chat, at least. So if there's anyone else who would like to ask any more questions, I'd be happy to answer. I hope it's been an informative session, a relevant one at least, because at least all your queries were answered, which is much better than, I guess, listening to someone just ramble on.
It was a really amazing session. Thank you so much.
Thank you so much.
So we have one more question. Does investors look for profit or the vision?
First the vision, then the profits. Profits can come later, as I said. But if the vision is not there, there's no reason why we should be even looking at the company. That's a pretty simple one. So I guess if there's nothing else, then thank you so much, guys. Great being here and interacting with you. Look forward to more such sessions. We need more and more people joining the ecosystem, and happy to help in any way that I can to make this happen. Thank you guys for organizing this event.
Thank you, sir.
For giving everyone such an opportunity. Really appreciate it.
Thank you, sir, for being with us. It was a really amazing session and insightful as well. You clear a lot of questions, a lot of queries for the young entrepreneurs, and I believe it would be really helpful for them in the upcoming future.
I hope so too. Thanks so much. Bye.
Now, guys, I will be playing a quick video of our sponsor.
Mom told me, अगर जॉब नहीं लगी ना तो शादी करा देंगे. Thanks to HireAct, where I could directly chat with the startup founders and get a job I deserve. Mom told me, अगर जॉब नहीं लगी ना तो शादी करा देंगे. Thanks to HireAct, where I could directly chat with the startup founders and get a job I deserve.
Thank you all for being with us. You are an amazing audience, and the questions were really great you asked to the Mr. Vikram Duggal. So I'll be ending the session. Bye.